Okay, this is a follow-up video from today's buy signal. We talked about this buy signal in the last video. So if you have not played the last video from this morning on December 4th, play the last video and you can see why this projected fair value gap yellow trigger entry was projected before it came up. Let's take a look at why we were a buy side bias today. I got in the upper left-hand corner, very simple. We talked about this in the last video. What are they trying to do into the Fed meeting on December 12th or December 10th, sorry. They're trying to mark the market up right now. They're trying to melt the market up. Why? Because it's above the 50 MA on the daily chart and the 2-hour chart. Simply put a 50 MA on a 2-hour chart, daily chart, and you can get the direction right away. They tried to bring it below it yesterday. It's a perfect buy signal. It stopped right at my low fair value gap I projected yesterday right here, and it's continuing. So that was in the last video. Play that. So what I did is I marked this level up, this FVG right here. I marked this level up before this yellow trigger came in. Why? In the last video, you can see how I marked up this fair value gap from this morning. This high also, I did it in the room. I did it again today. How did I do it? It's a 3-candle sequence on the 15-minute chart. If you get a gap in between 3 candles, that's called a fair value gap, where they're trying to grab liquidity on a pullback. So I recognize this, and on the first video, before we get this buy signal on our system right here, we got a buy signal right at this test in the fair value gap, and the market exploded to the upside. What you do is you take the 3-candle sequence. If you see a gap in between the 3-candle sequence between the wicks or the close, that's your fair value. So I drew the fair value gap was 62 3/4 to 66 1/4 for the entire trading session. You typically only get 1 or 2 fair value gaps on a 15-minute chart. So now I know my area where the professionals like to grab liquidity. And they did what's called a liquidity grab sweep. You see this wick, how it broke outside the fair value, closed right back inside of it. That is a sweep. They grabbed liquidity, took the rolling position traders out. The market's always trying to do 2 things during the day. They're trying to find liquidity, buy liquidity or sell liquidity, and it's trying to find fair value. And man, we were on top of it again today. Drew this up. I projected it on our main trading chart, and I put it right here. There's 66 3/4. There is 60. There's the top of it. So this is drew in. So this morning's video, I said we're looking for buy signals only because of what? They're trying to mark the market up into the Fed meeting. We're above our 50, 2-hour chart, daily chart's looking good. So our bias is to the upside. Well, I put the 15-minute fair value gap on here before this even came up. On my first video, 15-minute FVG. So now, if I got any setups that line up with the FVG, that's a buy signal. Well, it came right down to the FVG, broke it just a little bit for a liquidity grab sweep. They swept it. They got the rolling position traders out, and my yellow trigger fired right here. If you have it on your speakers, turn your speakers up. You would have a beep sound that is a buy signal on your speakers, because when that yellow trigger fires, it actually turns your speakers and it beeps on your indicator. So I got a buy signal right at the 15-minute fair value gap I projected before it even came down to it. So we had a buy signal, yellow trigger entry, 71. It's been as high as almost 81. 10 S&P points. That was projected 20 to 25 minutes before it even came down to it. So that's how you do it. You can use the fair value gaps as on a blank chart to find where these yellow triggers or these 25 buy and sell zones are likely to pull yourself in on the market. And I simply just go into the trading day, and they typically, you go back till 4, 5, 6, 7 in the morning and find your fair value gap for the entire trading session on that 15-minute chart. And I simply just put it on top of my entry chart. And now I know if I get a yellow trigger, a 25 buy or sell zone inside of this fair value gap, I'm with the smart money. I'm with the professional traders. So it came down to it, retested it, got inside the FVG. They had a liquidity grab sweep, broke a little bit, brought it back inside of it. They swept them. They got the rolling position traders out. Yellow trigger fired. Almost 10 S&P points. If you look at our volume profile, consequently, it was breaking through the HVA and the price profile at the same time. So everything just lined up. It's an ideal setup. It gives you an edge in the market by using them both together. Projected FVG lined up right with the entry on our algorithm. Now at 9:30, what I'll do, I'll move yesterday's 5-minute opening range, and we'll move them I leave them on until the next session, and then after the first 5 minutes, we'll move them to the opening range, and we'll play off the yellow triggers and 25 buy and sell zones off the 5-minute range break. Keep it simple. This is a very, very neat way how to trade the markets. We're trading strictly order flow. We know exactly where these professionals are looking to grab liquidity and do liquidity grab sweeps. And it was a perfect sweep. I mean, the professionals just took all the counters to the woodshed. It was beautiful how they did it today. Look how they had the fair value gap, this wick high and this wick low. There's a gap in the market. So creative, look what they did. They brought this candle, intra-candle, and they broke it below the low of the fair value gap. That's called a sweep. They're sweeping the counter trend traders out of the market. They swept them, close it back up, and boom, right to the upside. They did the same thing yesterday. They went right to my fair value gap, boom, right to the downside, right from my sell signal on our algorithm. So now I'm showing you why these yellow triggers, when's the best time to pull some of these yellow triggers and these 25 on buy and sell zones. I'm showing you exactly where the smart money is trying to grab liquidity, trying to do liquidity grab sweeps. That's how the market works. It's not moving average crossovers, using the MAC, using Fibonacci analysis, all that baloney. This is strictly order flow. Where are they trying to grab liquidity? Where are they trying to find fair value? And that's how the market works on a day-to-day basis. It's always trying to find fair value, always trying to find liquidity. So until we break below and close below 62.5, 62 3/4, our bias is up.